All right, good afternoon. Welcome to the weekly take on the market. Today is Friday, November 18th. I'm sorry, November 8th. It is 1:20 Pacific time. Market is closed. I will be your host. My name is Scott St. Clair. I am the manager of the Premium Product Group here at Investors Business Daily. Please take a moment to read the disclaimer. I'm not licensed. Can't tell you what to buy, what to sell, what to hold, how many shares to have. If it gaps down, what do I do? If it gaps up, what do I do? On these webinars, they are vetted with this disclaimer slide, so I'm allowed to speak a little bit more freely. And one of the great perks of working here is that if you like, and most of my colleagues are involved in markets, you get to be, you get to invest your own money fairly freely under the compliance umbrella. So it's a great perk, and I don't want to lose that perk. So there's that. Thank you. What happened to? Oh, I must have lost my slide. So same story in markets, industry groups, stocks to watch, quote of the week. So ETF launches. I find ETFs fascinating. They have really exploded, and this is a great chart of and I'm terrible at this, giving credit where credit is due. I got this off of Twitter or Substack, and I apologize if this is your slide and you happen to watch this video. I will try to give credit next week. I gotta be better at that. But anyways, so we're just seeing a huge influx of ETFs, and the reason is supply and demand, just good old supply and demand. The demand is high, therefore the supply will come in. And we have like a couple of new ones that are coming out, or they might be here. I haven't noticed, called like Battle. I think it's called Battle Shares. So you can be, it's like one would be short Ford and long Tesla, for example, or uh, long short Exxon and long First Solar or something like that. I think the first is the real one. The other one I made up. But anyways, you're just getting a huge influx of products, and a lot of them don't last if there's like certain volume rules and liquidity things to make it actually worthwhile. Otherwise, it's kind of like a mutual fund. It doesn't have the right assets under management. They would just close it up and move it into a different mutual fund. But ETFs are the name of the game. They're out there, and I don't know if they're the straw that stirs the drink, but they definitely they definitely influencing the price action in a lot of these bigger names because of indirectly you might own more Apple than you think you do, and because of I think Apple's in like every ETF out there, for example. All right, sentiment. A lot of people on Twitter are saying sentiment is muted. I think I saw a couple of people I follow say sentiment is muted, and I don't know. I don't know if I believe that, but anyways, it doesn't matter so much to the upside because this came out. Consumers were more upbeat on the stock market. 51% expected stocks to increase over the year ahead. The highest reading since the question was first asked in 1987. Only 23% expected stock prices to decline. So I feel like sentiment it might not be blistering, but it's pretty high, and the rally that we've had in the last couple of days is tantamount to that. But I did feel like a lot of people were worried about the election, therefore they weren't as um, positioned as they normally would be. And so then once the election was over, it was a rush to try to get that positioning back. So let's go to the indexes. I think that's all I have for that. And so here's the NASDAQ. And do you want the good news or the bad news as far as indexes? There's 57 good news items and just one bad news item. The relative strength. So the NASDAQ is breaking out to new highs, and you have a non-confirmation with the relative strength. It's underperforming the S&P in this little window from here to there. it could play catch up. It is a new high, and if it just on the surface, when you look at that chart, it just doesn't look all that bad, right? Not something that you would be like all negative on. So it's just the only kind of fly in the ointment I can see is the relative strength of the Nasdaq, and it might not be a bad thing. Notice like FNGU, which is the FANG index, triple levered, of course. The up one was actually down today, and the overall market is a pretty good day on the market. There was a lot of good action. So maybe the money is gradually coming out of the other one. Nvidia was down today. Today, I think it went into the Dow, or it's going in at the close. And it's the slightest little clues out there, but maybe they're tired, and the market or the money will find a different home. It's got to go somewhere. This money on the sidelines thing, it's, I could do a whole video on that. The money has to always go somewhere. So if money flies out of money market accounts, let's pretend there's X amount of money in a money market account, and everybody says, so that's money on the sidelines and go into the stock market. Okay, well, it's going to go into the stock market, but for it to go into the stock market, somebody has to come out of the stock market, right? For every buyer, there's a seller. And so those people that come out of the stock market, where do they go? They go into, well, let's pretend that they're going into money market. So they just flip flop. So I don't know if I follow that logic of money on the sidelines, because there will always be. I think I've heard that money on the sidelines since I got in the business. There's always been money on the sidelines. So that's not really what drives stock prices, in my humble opinion. I think it's just a change in perceptions. Like if stock could literally go up or down without any action, without any buyers or sellers. If I wanted to buy 1,000 shares of XYZ at $100, and I put my order in there and pretend there are no market makers or anything, I just go out there and say, hey, I'm a buyer of XYZ at $100. But no one wants to sell it to me. So then I say, okay, I'm willing to pay 101, but no one wants to sell it to me. Okay, I'll pay 102. No one's interested. You see how the stock went from 100 to 102, and it never traded. It just was the demand. My demand, my perception, or my anxiousness of getting that stock changed that price. And that's kind of really what happens, day after day, after week, after week, after month, after month. So anyways, the market's strong. I think the best thing to do every day, and I tell myself that, is like, what's the market doing right now? You start thinking about like, what's it going to do a week from now, a month from now, a year from now? And you could be right, but you could get run over and be wrong in trying to do that if you don't have the right trading style. If your trading style is like that, then so be it. But my trading style is not. I'm more of like just kind of in the moment. Where's the leadership? What stocks are acting well, and rinse and repeat as best I can, and try to just stay out of my own way mostly. S&P looks really good. It's pushing like kind of this boundary here. I think it probably will do something like that before you get some kind of correction. But again, I don't know. I mean, right now it's going up. Stocks I'm in are acting well, and I'll change my mind on Monday if I have to. But the market's in an uptrend. Sometimes it is what it is. The Russell, so it breaks out of this base, and it's held this gap so far. Not too bad. China is very difficult. I think I've talked about how difficult it is to trade because of the gaps. So it's just an avoid for me, right or wrong. Maybe I'll change my mind in a week or two, or 6 months. But I think it was KWeb where, do you see I had this trend line go off on KWeb, and I almost bought it there, and then it didn't close all that great, so I passed. And then the next day it was up like that, and I saw, I missed it. Should have bought it. And then the next today, it gaps down tremendously. 7% atrocious move this is an ETF. So it's just really tricky. So right or wrong, I think China's just a pass. Gold and silver. So gold looks a little toppy to me. It's gone through on a big move. I know it doesn't look like it. Let me price best fit this. And let me turn off my video. I notice I always watch these after the fact to critique myself. And I say again a lot, like again, I don't know. See, there's all these things that you don't realize you're doing when you're public speaking. So I watch and I actually try to improve that. So I noticed that sometimes when I have video on, it covers the chart. So I'm gonna turn my video off. So it's right on the 10 week or the 50 day. It doesn't look terrible in that regard, but it just looked a little bit semi-climactic at that point. So that looks tired. And then silver, I'm buying here and getting stopped the same day. And then I bought here and I sold like a day or two later, just because I just don't have any conviction in the trade. So it wasn't like I thought it was going to do this, but I'll get in, it looks good. And then I just slowly just lose my conviction in these trades. And conviction is such a big thing. If you don't have it, stocks can go down pennies to wiggle you out. So it's a big deal. Just didn't have any conviction, so I got out. But these look a little toppy for whatever that's worth. And then bonds. So these are very, very, very oversold. This is down like 12%. That's like almost. Let me think of an equivalent, like 25% in the S&P, 22%, something like that. So it's a pretty good correction in the bonds. So they look fairly oversold for whatever that's worth. But I don't know. I'm torn on what, if you want bonds to go up, do stocks go up? Maybe they go up because of that whole money flow thing and rush to safety. So stocks go down, or do stocks go up because people like the lower interest rates? You could just drive yourself crazy. So I know Mike Webster will say, Bill rarely, if ever, talked about the bond market. That's probably the best strategy. I think that should do it for the indexes. Was there anything? Oh, I know what I want from like, people, the sentiment thing. I want to talk about the sentiment thing. So when you get this type of action, like this is a closed-end fund that invests in private technology companies. I think it has like a 30, don't quote me on it, but it has like a 25, 30% position in SpaceX. And so Tesla's gone crazy. Elon, right or wrong, is tied to the win by Trump. And so this went bananas, 13 to 40. And the NAV, I guess, is like, it's like a six-fold NAV, is if you trust what you read on Twitter. In other words, if they were to break it all up and sell it for parts, it's just nowhere near this price. So there, if sentiment's muted thing, I don't know. I see this type of action, and I'd say, well, here's one chink in that armor of sentiment. Now, in the 90s, because this market is very 90s like. Is this 95? Is it 99? I don't know. I don't know. It's hard to tell. But there were a lot, they say they don't ring a bell at the top. They don't. What they do is they ring about 50 bells at the top. And I watched a lot of bells go off from 99 to 2000 before the market finally topped. So you have to be careful when you see these single instances that kind of bother you from that standpoint. All right, let's go to the industry groups. Why am I clicking by the flag? Sorry, I'm used to doing that. When I pull up a stock, I always click by that flag to check out the mutual fund ownership. So industry group rank. So oil, gas, royalty trust, telecom infrastructure, telecom fiber optics. Interesting. Energy alternative. Look at the fiber optics move, 164.73. This is interesting. Computer software education, 80.35. Banks had a really good day post-election. media newspapers. For some reason they had a big day post-election. Banks. So a little bit of that. And you can see mining gold, silver is losing a little bit of its luster, went from 9 to 21, and so on. So I prefer to see the semiconductors and software and stuff like that, but those stocks are out there. They're you just have to, maybe it's not quite so group move related. So I don't see a lot in the industry groups as a whole. And for me, I know the industry groups are important. They definitely make a difference in the stock, but if you have like a bottom up or top down approach, I think I've talked about this before, but top down is I hope I don't mess this up, embarrass myself, but the stock, the industry group would be underneath that. The overall market would be underneath that. The market and the economy would be underneath that, like the foundation. And that's how I invest. Just show me the stock that's acting the best. I don't care what industry group it's in. Then move. Oh, it's in a good industry group. Great. Oh, the market's really good. Great. Oh, the economy's roaring. Great. But I'm going to start at the top with that stock that's acting well. That's how I would do it. Some people do bottoms up, but that I would call myself top down. All right, so let's go into the stocks. And let's start with, like, I've got a list here. So app. So there's a I don't know how the saying goes, but there's a saying that like the accidents or surprises, good or bad, tend to happen in motion, in the motion of the stock. In other words, positive surprises tend to happen when stocks are doing this. Negative surprises tend to happen when stocks are doing that. And it's not always the case, but mostly you'd be much better off with that philosophy. So, you had earnings coming out and somebody was relentlessly buying this stock regardless of price. It just didn't matter. Pay 130, pay 140, pay 150, pay 160. Do they have inside information or anything like that? I'm not a conspiracy theory in that regard. I just think they know the business inside and out, and they just think that the earnings are going to be great. And boom, they were fabulous. 317. Look at the margins, 73. Revenue up 39%, and the stock just explodes up 46%. And then today it just adds on to that. It's just incredible how with every like, if I look at the tick chart, like this was like 2:30 after hours, and I was like thinking that's probably a buy, and I just couldn't bring myself to buy it. And then it runs to 250, but this is a 15-minute chart, and you see it just relentless. Just every 15 minutes is practically up. So really powerful leadership. If you have it, if I had this, let's pretend that I had this and bought it here. Boy, what a dream that'd be. I would be out of 80% of it, if not more. But honestly, I probably would have been out there, 240. So if you have this, you just have to have a style thing. Is it extended? For sure. Is it a climax top? I don't think so just yet, because it's really early in the process. You're 12 weeks out of the base. And I think you need at least 18 before be like a textbook climax top. But it's climactic action for sure. I mean, the stock was 10 way down here, and now it's roaring up to 300. So if I would just have a plan, some kind of plan. I hate to, it'd just be crazy to give up this kind of gain. It seems unlikely, but do the math. If it builds a base 25% from here, that's 75 points. It's incredible how nasty the math is. So, watch it go from 300 down to 225. That would be super difficult for most people, that's for sure. But leadership, for sure. Incredible leadership. Palantir, another one, right? So it's rallying, it's acting really well, and they report earnings, and boom, same in motion, same way. Same thought process for app. Very climactic short term. Is it a climax? I mean, does it qualify kind of in that regard? Maybe. This one's a little closer versus app because it is a little bit further out from the base. So yeah, this one I would say if you had both, and you just decide I just want to reduce my risk, this probably would be the better idea, I think, as far as that. It is in the S&P 500, so it's going to be a little more muted probably to the downside than an app would be. But in theory, the upside it should be muted as well. So app would probably go up more in that regard. So to the sentiment thing, it's sentiment is very there's animal spirits are alive in the market for sure. They buy Palantir at 45, 46, 47, 48, 49. No price too high. Just go buy it. So let's talk about NVIDIA because that's a good one as far as sentiment. Into the Dow Jones Industrial Average today, I believe. What does that mean? Historically, it means underperformance. By the time they get into a big index like that, the reason they go into a big index like that is because they've made an incredible move. So I don't remember when like Cisco went into the I think it actually went in sometime in here, but I could be wrong. But like Intel, they moved into the let's find out. I'm going to do a search. Bear with me here because I got to know this. Intel Dow Jones inclusion. Because I bet that if you bought it Intel the day it was included in the Dow Jones and sold it the day it was removed, you probably made $0. Intel stock was added to the Dow Jones Index on November 1st, 1999. If I did this search right. Yeah, what happened? Intel made history alongside Microsoft back on November 1st, 1999. All right. So where's November 1st, 1999 on this chart? Right there. Somewhere in there. So let's just say, let's give it the benefit of the doubt and say you paid 36. No, Intel's not exactly a huge dividend payer either, is it? So you have not only 25 years of losses, but the upside from the market, right? I don't know what they removed, but imagine they kept what they removed that day. Probably, I guess it did better than Intel. So there's Intel. Microsoft on that day is up for sure. But what happened? So right there. So a long period of underperformance before made its new run. So and then Salesforce I know went into the Dow. I think like here or something because it was at the low when Salesforce went in. It was when Exxon went out, and Exxon removed what. August 31st, 2020 was Exxon was removed. So August 31st, 2020, right there. Exxon removed right there. 40, it's now 120. Threefold move. Now it did go down to 30, but you're not buying it for a trade. This is like just a kind of a long-term thing. So I find it very interesting. We'll see how NVIDIA plays out. It probably plays out, honestly, I think more Microsoft-ish than the others. In other words, long period of underperformance. But again, I'm just guessing am I going to do anything with it? No. But it's the leader and you have earnings in 12 days. So it'll definitely be interesting to see how it acts on the earnings. That's for sure. Tesla, let me check off the boxes, the stocks. So sure, on the daily, Tesla's really difficult. Like look at all these gaps, both ways, gaps up, gaps down, gaps up, undercuts the low, gaps up. So daily wise, really difficult. Just not a stock I'd want to trade. Okay, let me go to the weekly. Weekly, boy, it sure looks strong. Sure looks much better. Coming out of this big base, really big weekly bar, a little cleaner. Let's go to the monthly. Wow. It's hard for me, and this is where my bias can get in the way. But if you gave me that chart and just said it was XYZ, what do you think, Scott? I'd say that looks like it's going higher and maybe to all-time highs. So acting really well. I'm not in it. Just have a hard time, and I probably won't ever be in it. I just feel like I've missed the boat on it. But I know a lot of people are, and I have to be as neutral as I can about the stock price, and it's just impressive action with the stock price. Let's see, Apple, not a whole lot. Google, building a base. I think I have let me go back to standard. I prefer this. So building a base. Amazon, I think, broke out a few days ago. I mean, I get a package every other day. I don't know why I don't own Amazon. Great company. It's not going to run away and hide, but sure is acting well. What else is it that Meta? Now I know it went down initially because of the election, but that sure looks good as well. So holding up just fine. And then so you have this index, and I could probably see this as a cup with handle with a breakout there. If you go to the non-levered one, which is FANG S, it broke out a little bit over there. So FANG stocks, relative strength wise, losing a little bit of luster, but they don't look like shorts, that's for sure. So what else is left in the big area? I think that would be it on the big stuff. All right, let's go like crypto MSTR. Looks really good. You're very speculative, obviously, but you know, I don't think speculative is such is it's speculative is not just four-letter word. Like a lot of people say, "Oh, that stock's speculative." Yeah, they're all speculative, in my opinion. They all can go down a zillion percent. Look at Intel. So everything in the stock market is speculative. Some might be more speculative than others, but that whole thing, oh, it's speculative. I did another one of my eye rolls when no one's looking. With the money market, money on the sidelines routine. So yeah, forget all. Yeah, it's speculative. Yeah, great, good. That means when you get it right, it goes up a lot. So I wouldn't be so afraid of speculative. Just be aware that it's speculative and adjust your position size accordingly if you want to buy it. But some people are like, oh, I'd never buy that. It's so speculative. Okay, that's fine, but don't cry the blues when the thing's up, 35%, 21 days. This is the one that I own kind of on the crypto side. TeraWulf, super speculative. Perfect, Scott, because guess what? It goes from 5.5 to 8 because it's super speculative. And if I'm wrong, it goes from 5.5 to 5.25 or 5.125 or whatever, and I get out. So that's how it works. You risk a little to make a lot if you get it right. But this is Druckenmiller has a position, Duquesne Capital. That's how I found out about this stock. So, and then you have IBIT, which is the actual, well, I mean, it's the ETF for Bitcoin and coming out of this big base. Hard to be bearish on that. I guess if it does this, it comes back in, then it's easier to be bearish. But right here, no. So MSTR, Goldman Sachs, I think somebody said it had its best day ever relative to the S&P on this day in like 20 years or something. So it was up maybe 13-fold, and the S&P was up what? Let's say the S&P was up 2% that day. So it was up 6.5, 7-fold the S&P. Very interesting action, super strong. JP Morgan, I'm sure. I don't trade these. I don't look at them much, but again, there's just a lot of really, really strong action in these stocks. Goldman Sachs. All right. So Shark Ninja. Now here's the other side of earnings, right? If you hold through earnings, you're going to get these. You hold app, it goes up. You hold Shark Ninja, it comes down. I think for me, I take the good with the bad. I just own them all. I didn't own app and I didn't own Shark Ninja, so it didn't have either one of those. But if you did, you're down 17% on Shark Ninja, no fun. You've given back most of your gains, but the app is up 40%. And from a position size standpoint, it swamps the move in Shark Ninja. If you survive this shakeout and you're barely down now, I wouldn't survive it. This day is tough, but the next day and then the next couple of days. Now, if I got out and I really loved the name, I could get back in maybe that day, but maybe this day and maybe this day, or maybe all three. If you want to buy 300 shares, you buy 100, you buy 100, you buy 100. If you don't have to buy 300 all in one fell swoop, or 3,000, you buy 1,000, you buy 1,000, you buy 1,000. So much easier to buy like that. Just get yourself some position, some kind of anchor point to manage off of. Buy Shark Ninja at 95, and now it's 96, 97, 98. Oh gosh, that was a pretty good buy at 95. Maybe I'll buy another 100 shares at 98, and so on and so forth. You buy 100 shares at 95, it's 94, 93, 92, 91. Boy, that was a lousy buy. Maybe I ought to get out, or I'm definitely not interested in buying anymore. And you just do that over and over. So it's interesting action weekly. I don't know. This is not something that I would be involved in. I don't like the gap down, and this could be like that type of action. It's usually what happens, not always, but it's just a pass for me. But I know a lot of people have this stock. GGAL, only up 40%, 7%, 50 days, acting fantastic, coming out of that base. YPF, which is so kind of in this profit zone, and it gapped up to like 31 this morning on earnings. And that's usually, if you have something that's run like 1, 2, 3, 4, 5, 6 days. See, this is where it's kind of tricky. Like I would sell that. I didn't have YPF, but I would sell at 31 in the morning, even in the pre-market. And then I'd be so glad I did. But then I'd also do the same maybe for app and be so sad that I did, right? But the idea is do the same. If you cherry pick it, like, oh, I'm going to sell app, but I'm going to keep YPF. And then you're just so frustrated because the one you kept went down and the one you sold went up. So it's just have a process and know that over the long run, that process will work if you believe in it. If it's a sound process, right? So I think you either sell all of them or sell none of them, or you sell 80% of them and you keep 20% of all of them, or you sell 50% of them and you always, no matter what, they gap up on earnings, I sell half or what, and you just always do the same thing. That way, there's no second guessing either. You say, well, that's my process. It went higher. Okay. Now, if you find that, gosh, that's not really working for me. I'm selling them and they're going higher. I'm selling them going higher. Maybe you change to sell a quarter of them. Adjust accordingly, like a golf swing. If you're hitting you're hitting your 9-iron too far all the time, well, you adjust the swing or hit the wedge. Right? Make a change. Don't just keep beating your head against the wall. So YPF, GGA, Melly went down on earnings. So that wouldn't be any fun. I would be out, especially if you held and try to get a little balance, I'd be out. Like, look how the relative strength fell off a cliff, and the earnings are, gosh, pretty pedestrian. So that would be a pass for me. ANET, I think, went down, but didn't close. It started to come back. It's still above the moving averages. It would be, if you bought it here, I think you can survive it and leave it. If it came all the way back, like for me, if something that I was up like 7, 8, 9, 10% on, I wouldn't, if I could help it, I wouldn't let it come all the way back to pivot. I'd be out before that. So ANET, Kava. leadership. I don't know how many times I've done this video and just said this is the lead, one of the leaders in the group, and yet I don't own a single share. This is just absolute tomfoolery on my part. Yeah, how many chances do I want, right? So I've just missed this one. If you're in this, it's acting awesome. Reddit, yeah, very extended. This is the old gaps up on earnings like app, and then just continues. Let's look at the weekly chart. Wow. And like, look, the number of weeks up in a row is such a good indicator. It doesn't mean you have to rush out and buy it, but it's just relentless buying by institutions. 1, 2, 3, 4, 5, 6, 7, 7 weeks in a row, just up, up, up. How about app? How many weeks up in a row did it have? 1, 2, 3, 4, 5, and then on week 6, it's down a whole 1%. I know it's in hindsight, it seems easy, but boy, that sure does seem easy. I'm not even counting these weeks here either. So weeks up in a row is a really good indicator of strength. KMI in the energy group looks very good. Pays a yield. It's natural gas. As much as I'd love for us to all have these small modular reactors in our backyard, it's not going to happen anytime soon. And so natural gas, these types of companies, it seem to be the play. Maybe there's something that they believe the administration is going to do, because it had a really, really strong day on election results. BWXT, I like this one. I wish I could find a way to get into it, but they build power generation systems. A little sleepier, nothing wrong with that. How about EME? A little sleepier. Yeah, what's wrong with sleepy? 28%, 40 days. That's not so sleepy. So there's just like so many names out there now. Where are they now? Are they positioned? But this is a good example. TLN, gap down on some kind of regulation, but then it closed so well. I don't want to say so well. I'm going to say it closed very well. Like, it was still down, but it closed above the moving average, and it was in the top of the range. Look at the closing range, 77%. So that's a support day, and then the next day it just blasts out of there. This is a name I do own. I did buy it this day, and it's that process. I bought very little this day because of that support. It looked like a support day. I'm gonna go buy that, and the next day I'm gonna add to it and just keep feeding the winners. Now, at some point, I'm gonna sell a little bit of it, and that's how I'll do it, just to reduce my average cost. But that's kind of what I'm doing. Just buy a little bit of it and see if it can work. So this one looks very good. VST, I should have bought VST the same way. It was either that day or that day, but I had Talon, so I was like, do I want two of them? And the answer was yes, I do want two of them, but I didn't. Acting really well. I think the avoid, let's see, yes. And I said this on IBD Live, that I love Talon, I love VST, but I think CEG is the avoid. This to me was what I called an island top. Mike Webster said I was wrong. That's not an island top. An island top is only like a single day or two. I guess what from the Bill O'Neill standpoint, that's where he's going. I looked it up, and like from a technical analysis, McGee, Edwards and McGee standpoint, it's what they call like an island reversal. So I thought they were one and the same, but anyways, this looks like an island. Oops, I didn't draw that very well. An island reversal. You have all these, jumps up, you have all these buyers up here, and then they kind of get trapped. So CEG would be the avoid on that side for me. All right, man, there's just so many stocks. All right, two more, and then we'll be done. Coherent. So announced earnings 2 nights ago. Look at the weekly chart. Look how strong that is right off the 10-week. That's, if you missed the breakout, this is your chance, the 10-week. You had to buy it into earnings, or you had to buy it right after earnings a little bit higher off the 10-week. That's fine if you'd prefer to do that. It didn't jump out too bad. It wasn't too hard to buy. But this is Druckenmiller, Duquesne Capital's largest position. So that gives me the gumption to have, that to me is like the sponsorship, Contrafund, et cetera, all of them. Do they have it? Great. But I like to see if any of these big hedge funds with incredible research and money behind them. Do they have any? So this one looks very good. I do obviously. I hopefully it is. I think I don't know if it's my largest position. If it's not my largest, it's my second largest because and that's because of this one, ALAB. So this, if it's not my, this is 1 or 2. So Coherent and ALAB are 1 and 2 for me. High octane, I like high octane. That's just the way I kind of trade. I prefer them to go. And I bought this. Well, let me tell a little story here. Okay, so I bought it. I bought it here when it poked its head out, and then it gave it all back, and I got out, and then it came back, and I got back in. It's kind of a cluster, and then it gapped up, and then I sold it, and I thought, the earnings and all that, and the whole election thing, and this is what you just kind of get yourself in knots, and so I was not in for the gap up, but so I had to watch it gap up, and then it becomes like, okay, how do I get in? And this is the hard part. I just don't have a really good idea on what to do with gap ups. Let's go 60-minute chart. I know Arusha said he'll just like buy them, at least a little bit. I like to see how they shake out. So see how this day, that was election day, and it shook out and gapped down. It was actually down while the market was roaring. And so then I just start going in there and buying that one because I want a position in it. And by the end of the day, it was up. Now, I didn't expect that. I didn't expect that to happen. I figured I would be down on it most of the day. I'd buy it and I'd be down, and just that would be it. But that's it showed you how much demand there was for this stock. It tried to open lower and couldn't. Closed blue. A little shakeout yesterday. Closed on the highs. Weekly chart. Look at the earnings line. So, and this is right in that sweet narrative spot of AI. So I tried to learn a little bit about the business, to be honest with you, but with the YouTube videos and all that, it's a little tougher for me. So I rely on the charts. It does have sponsorship on the mutual fund side. So you can see Invesco, Lord Abbett, Alger, and Fidelity. So this is interesting. So let's look at what they have. So Invesco barely 0.18. What's that? 180,000 shares. Lord Abbett, 330, down a little bit. Alger, what is that? 2,000 shares? Gosh, come on, Alger. Is that right? 2,000 shares? So I don't see, the point in that, but whatever. I'm sure he's. I would bet he's added to that. Contra, 270,000 shares, and you can see these were probably IPO. I'm going to guess that they all got IPO shares, so they all own it probably somewhere in here, or the IPO, which is, my eyes are so bad. What's that? Around $36, the pricing of the IPO, and then they just wait. And like what Will Danoff will say, the manager of Contra. It's a poker game, and I'll wait till my hand improves. Well, I think the hand improved. It improved immensely with this huge quarter. Look at those earnings, up 999%, revenue up 200%, and margins up 77%. I was listening to an old, I'm going to turn my camera on for this little story. I have these old tapes that I listened to from when Bill and David Ryan would go out on the road and talk about, the advanced classes. And this is probably in the 90s when Bill said this. And he said, I have a screen named after this, but he said, you want to know what the best stock in the market is? He said, tell me the stock with earnings up 500%. He said, you know what the second best stock in the market is? The one with earnings up 400%, and so on and so forth. So he just was like, that's the best stock, the one with the biggest earnings in the most recent quarter. That's not always the case. It's not exactly that easy. But why did Nvidia move? Well, from a market cap stock standpoint, who has better earnings than this? 500, 400, 400. I know it is slightly down, but nobody, not even close. What are Apple's earnings? 12%, 11%, 1%. How about Google? 35, 53, 28, slowing, but you see what I mean? So best stock in the market, show me the one with the biggest earnings. And those earnings, 900%, I know it's coming from a loss of a penny, but sequentially, 9 cents, 13 cents, not 23 cents. So that gives me the confidence that it's worth a shot. Could I be wrong? Sure. I get stopped out. That happens a lot, but I have to take a shot when I see something like that. It's just too powerful a narrative. All right. So I think I covered all of them. Let's go to the quote of the week. Stanley Druckenmiller was on a podcast recently. I would Google it. I think it was with the I tweeted it. So if you happen to follow me on Twitter, you'll find the link there. I've always had the view that markets are smart. They're fast and they're getting much more so. This is Stanley talking, but I also believe the same. The market is really fast. Like things are changing. Like app goes up 40% in one fell swoop. That didn't used to happen. It used to take days to weeks for that to happen. Even on a very powerful earnings report, it might open up 8 or 12% or something like that, and then gradually move up. It's just things just boom. They're reading these earnings releases after hours with the bots, and done. Stock wherever it needs to be based on the demand. So they're getting really fast. That doesn't mean you have to get faster. I actually think you need to be slower because you can't be faster than the machines. But that's for another day. If I hear a concept and I like it, if I wait and spend 2 or 3 months analyzing it, I may miss a big part of the move. So true. You're sitting around trying to figure out why app went up, like I am. It's up 60 points from where I could have bought it on in the pre-market. That's not including the move it made previously. I'm watching it. I'm saying it's the leader, but I'm not owning it because I'm waiting for this mythical pullback that never comes. So you can't invest first, investigate later. A lot of times, it's hard to buy a stock. You're looking at 100. It's 160. What he's saying is you're looking at it at 100. You're thinking about buying the stock, but now it's 160 because you're too busy doing the research. And even if it's going to 400, somehow your head is screwed up and you're waiting for the pullback. So much like app. So like I should have bought it at 100. It's now 160, and I'm talking about XYZ. Well, I think XYZ can go to 400. So 160, that's how these institutions do. 160, that's cheap. That's a great price. But I'm in the back of my head thinking, gosh, I knew I should have bought it at 100. And this happens to me a lot on a smaller scale. In other words, I'm looking at it at 100. It's now 105. And it's like, gosh, I knew I should have just paid 100 for it. And then now it's hard for me to pay 105. Then it's 112. It's like, now it's really hard. Like I should have paid 105, should have paid 100. That's 112. And then you're waiting for this pullback. So somehow your head is screwed up and you're waiting for the pullback. So how he combats that, he says, is so we will buy something. And he says a meaningful position. He actually talks about buy a meaningful position. Now he's running big money, like with a B. So I don't know what he thinks a meaningful position is. Is it 1% of the money? Is it 2% of the money? He does have some small 1% positions I've seen. Like the first time he bought that Argentinian bank, I think it was like a 1.5% position. So he goes, if we will buy something. So just get in there, buy something like Darvis would. We think we made a mistake, we will sell it. And if I don't think we made a mistake, we will add to it. Who's buying app at 230, 231, 232, 235, 240, 245, and just like it's like doesn't matter. Just keep buying it regardless of the price. It's somebody, some institution or a number of them most likely. And so, if I don't think we made a mistake, we will add to it. That's the right strategy. So I would listen to that webinar if you get a chance. I love listening to Druckenmiller. I always fanboy on him. So maybe Ali always makes fun of me when I talk about him on IB Live. So anyways, all right. I know this video might have been long, but we didn't do one last week. So 800-831-2525, marketsurge@investors.com. Have a great weekend, and we will see you next week. Bye, everyone.